The prices of cars are crashing in America, with Cox Automotive reporting a 4.2% decline month over month in used car prices. That's one of the biggest drops in US history, and these prices, they're now down nearly 10% year over year.
Imagine struggling with the price of food and still finding it hard to own a car, even a used one. Fortunately, consumers are starting to see relief on one of the core CPI items as the price of used cars dropped from absurdly expensive to merely expensive over the past year. That's good news for you if you are in the market for a used car, as it continues to decrease due to rising interest rates and decreased consumer demand. Will the price drop way to reach something close to the pre-pandemic period? Let's get to know what experts think about this. The worldwide pandemic that erupted at the beginning of 2020 has forever changed the globe in many ways. Demand made many things scarce, and those items became hard to come by or exponentially more expensive. The car market was not immune to this either. It's important to understand why that is. There are several reasons, chief among them was the chip shortage that ceased new vehicle production, which caused used market cars to skyrocket in price. Of course, this chip shortage resulted from the COVID-19 pandemic and the Russian invasion of Ukraine. In 2020, there was a 100% certainty that a recession was upon us. Former President Donald Trump even made a statement on that.
The stock market took another hit today. Is the U.S. economy heading into a recession?
Well, it may be. We're not thinking in terms of recession. We're thinking in terms of the virus. Once we stop, I think there's a tremendous pent-up demand, both in terms of the stock market and in terms of the economy.
This is due to the virus outbreak and shelter-in-place orders. People weren't moving around much, and they didn't need cars. Many people were working from home or not even working at all. Unlike the Great Recession, times weren't hampered by high gas prices or credit lending issues. Still, 16.8 million new unemployment claims were filed between March 15th and April 4th of 2020.
6.6 million, breaking news, new weekly unemployment claims. That's in line with the number last week. Remember, 2 weeks ago it was 3.28 million. That brings us to about 16.5 million unemployment claims in the last 3 weeks alone.
Used car prices first surged in 2021 after the pandemic disrupted the production of new vehicles, leading to shortages. At that time, the stay-at-home order was lifted, and people now needed cars to move around. People have no choice but to brace themselves for paying premium prices for new and used cars for a significant amount of time. Bizarrely, some car owners found that their vehicles had increased in value since they bought them, and that some used cars were selling for more than their new equivalents. Things began to let up that same year as restrictions were levied and normal operations were resumed. Then came the Russia-Ukraine war in early 2022 when Russia invaded Ukraine. Among the many tragedies that ensue with warfare, there are undoubtedly serious and permanent consequences. This war affected European production, resulting in fewer vehicles from European makers being able to be allocated to the United States.
BMW is not just not shipping to Russia anymore. BMW has actually halted production at 2 different facilities. Mercedes is slowing work down. Volkswagen is trying to figure out where it's going to get parts from. And it's not just the European drivers hurting. The product is under lock and key here at Queens Luxury of New York, and for good reason. Its value keeps going up and up.
The global pandemic may be temporary, resulting in chip shortages. Still, all have permanently changed the car buying experience. Could you let me know what changed in your car buying experience in the comments section below? Going back to used cars prices, these effects have been reflected in the last 24 months or so. Buyers paid more than 12.2% more for new cars in January 2022 than the previous January, while used vehicles were up more than 40% year over year. The chart here gives an idea of the sudden surge in price. Now that the pandemic's effects on the economy have faded, the used car market has returned to something resembling normal, though still more expensive. According to Goldman Sachs, chip manufacturers are also trying to meet demand. Let's hear what Bloomberg News said about the issue.
So what caused the shortfall? The stay-at-home shift triggered by the pandemic rearranged supply and demand. When certain businesses shut down, suppliers started to direct chips to phone and computer makers. Then, when the economy started to reopen, industries like automakers that had cut back on orders then rushed to re-up. The supply chain and capacity could not meet this surge in demand.
Auto production is expected to return to normal. Once automakers get the chips needed to produce a normal supply of new car inventory will stabilize. Millions of consumers forced to buy used cars may return to purchasing new cars. In addition, supply chain issues due to the pandemic have been cleared up, helping expand auto product capacity. This will result in a decrease in demand for used cars. According to auto market data company Edmunds, used cars sold for 5.5% less on average over the 12 months ending in the third quarter of 2023, with the average transaction price falling to $28,935 from $30,603. The rise and fall, as studied by Edmunds, is shown in the graph. While still 44% above the $20,085 recorded in the third quarter of 2018, it was a welcome sign for shoppers that the frenzied pandemic-era used car market is returning to something approaching normal. Ivan Drury, Edmunds Director of Insight, believes that both dealers and consumers should benefit from the lessening of market turbulence, as pricing and transacting can be handled with less risk that a vehicle's value will move sharply in either direction over a short period, as what happening throughout the past few years. The inflation reading as of the surge in 2021 showed that pre-owned cars and trucks cost 3.3% less than they did a year ago. With airline tickets and gasoline more expensive, a transportation sector that has taken strapped consumers for a ride is finally slowing down. It's a welcome sign for car buyers who have faced unprecedented sticker shock in the form of used cars that appreciate value. At the height of the craze, the prices on some models soared above fresh out of the factory prices. The most eye-catching of the bunch is the iconic Porsche 911 sports car, which, after 3 years on the road, is selling for 5.7% more than its original sticker price, which amounts to an increase of $11,373, according to a study of 3 million used car transactions sold from January to October 2022, conducted by the used vehicle website, iSeeCars.com. Today, the used car bubble is not just bursting, but reversing fast. Concerns around this potential crash are building in the auto market. Still, before we get to that, some factors give investors worry. Why used cars are so high? One of the reasons for that is the high interest rate, which is affecting demand very badly. The Federal Reserve's efforts to combat inflation through interest rate hikes constrain the affordability of new and used vehicles. Americans are adjusting their buying preferences, choosing used cars over new ones and prioritizing repairs over replacements for their current vehicles. The Fed, responsible for maintaining purchasing power, raised rates 11 times from February 2022 to July 2023. Here is Fed Chair Jerome Powell on the podium during the 11th raise.
Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a quarter percentage point, and we are continuing to reduce our securities holdings at a brisk pace.
Though it paused in September, the benchmark rate is 5.25% to 5.5%. According to Kelley Blue Book, these rate hikes coincide with a tight car market driven by supply chain disruptions, pushing average new vehicle prices above $48,500 in May. These rising interest rates increase borrowing costs, significantly raising vehicle financing expenses compared to previous years. Since the beginning of 2022, average vehicle interest rates have been climbing due to the Federal Reserve's efforts to combat inflation. Higher borrowing expenses discourage spending and limit people's ability to afford major purchases, contributing to an economic slowdown. While auto loan rates have increased this year, it's essential to consider the broader context. They are still significantly lower than they were a decade ago, when the average rate ranged from an all-time high of 17.36% in late 1981 to an all-time low of 4% in late 2015. The chart indicates it concerning credit cards and mortgages. Over the past decade, rates have generally remained within the 4% to 5.50% range, except for recent months. According to Charlie Bolello, the director of research at Pension Partners LLC, used car prices are now down year over year, and the first time we saw it was in May 2020. Expectations for this year. Although prices for luxury brands like Ferrari and Lamborghini are still rising, prices for practically other used car brands are heading downhill. Used vehicle prices are expected to stabilize this year after buyers of pre-owned cars and trucks got more relief in 2023 following a stretch of record prices. The automotive data firm Cox Automotive expects wholesale prices on its Manheim Used Vehicle Value Index, which tracks the prices of used vehicles sold at U.S. wholesale auctions. It will end 2024 only 0.5% higher than in December 2023. According to Cox, pricing will fluctuate monthly due to selling seasonality and other factors. The slight increase would compare with a 7% decline in 2023 and a nearly 15% drop in 2022 from inflated prices during the coronavirus pandemic. At that time, the availability of new vehicles fell to record lows due to supply chain and parts problems that interrupted vehicle production. According to Cox Automotive Chief Economist Jonathan Smoke in 2023, trends are part of a larger move away from the volatility of the pandemic era, when a convergence of factors caused prices to surge dramatically, including supply, demand, loan rates, and incomes. He even said used vehicle prices would see even greater declines over the next 3 months following large wholesale declines in May, June, and July. Vehicles are depreciating assets. The unique conditions that led to unprecedented appreciation in vehicle values in 2020 and 2021 have been replaced by more normal conditions where demand and supply are more balanced. Here's what he said.
And we hit the peak in used interest rates in late March while the banking crisis was going on. And it's one of the positive factors that has certainly not only not gotten worse, but has actually gotten better for the consumer since then. Yes, we did see interest rates drift up in August, but to start September, used rates are trending down again. We're more than a quarter of a point off of the peak for the year. But most importantly, wholesale prices came down strongly in April, May, June, and July.
Noting that retail used prices have dipped about 3% from their peak in April, Smoke predicts used vehicles will become more affordable in the second half of 2023 as inflation continues its descent to a soft landing. Recent trends also point to a calmer and more predictable auto market in future months compared to the road traveled in recent years. Over the last 3 years, demand has often been more than the market could bear, and that's precisely why we had record auto-related inflation, which contributed to the inflation that the Fed has been fighting. Used car pricing dropped slightly over the past year. The average transaction price was about $30,756 in July 2022, compared to $29,198 in July 2023. As Smoke said, car shoppers searched for used cars when the prices of new ones increased, as used ones traditionally offer lower pricing. But that shift in demand caused a shortage of used cars, driving up those prices as well. Cox Automotive Senior Director of Economic and Industry Insight, Jeremy Robb, said 2024 will be less volatile than 2023. However, they still have to expect unexpected occurrences in the wholesale market. Here is the car expert's opinion.
2023 was a bit more normal overall, what we saw in the industry, especially relative to 2021 and 2022. And we expect more of that this year in 2024. It's not going to be what it was back in 2019 in our pre-pandemic normals, but we're moving in the right direction.
The stability is a win for potential car buyers. However, used vehicle prices are still higher than before the pandemic. Retail prices for consumers traditionally follow changes in wholesale prices. Still, they have not fallen as quickly as wholesale prices in recent years. Cox reports the average listing price of a used vehicle was $26,091 as of last month, down 3.9% from a year earlier and 7.5% lower than the roughly $28,200 to end 2021. According to the automaker, the average listing prices for used vehicles were less than $20,000 in 2019. Used vehicle sales are expected to increase by less than 1% to 36.2 million in 2024. Meanwhile, Cox expects all-electric vehicle sales to increase by more than 10% of retail new car and truck sales in 2024. That would compare with 1.1 million units, or 7.4% of retail sales, sold in 2023. Volatility with transaction prices is expected to level when supply meets demand, which was predicted to be in late 2023 or early 2024 when automakers could produce enough new vehicles to encounter new car claims. However, the pandemic has caused a monumental shift in dealership strategy. COVID presented an opportunity to get lean and mean, pulling incentives and reducing inventory. Car manufacturers and dealers understood that less inventory made it more profitable. The big changes in dealership models likely signal that discounts and incentives of the past won't be coming back. Manufacturers will maintain a balance of inventory to sales demand to keep the prices up. That means we may never see 2019 levels again. Used car inventory will be limited in 3 to 5 years, and prices will remain elevated. It seems the new car supply will be low in 2024. With used cars lagging behind that for at least a few years, it will be years before we hit pre-COVID levels, if ever. Overall, we are nearing predictions of when the car market may come down big. Though the war in Ukraine has been ongoing for over a year after being declared, the vehicle supply is finally gaining. However, right now we are just beginning to see the signs of a car market value decline when unpredictable, volatile outside factors persist. The safe bet would be to wait out the storm and let the tsunami pass before proceeding. With prices going downward more than upward now, isn't this the right time to get your car if you need one? You might be waiting for more decreases, but can we have the pre-pandemic price? Let us know your thoughts in the comments section. If you found this video insightful, don't forget to like and subscribe for more financial tips. See you in the next one.